On to cable. Pound USD outlook. Once again, there's no interest rates change. No interest rate changes expected in the first half of the year. The UK banks face that same kind of loan exposure to Iceland and Greece. Probably the other PIGS countries. Data. Actually, this week we did see some okay data out of the UK. Consumer prices, i.e. inflation, were a bit hotter than expected. But the UK, they're still in a spot where they're not going to raise rates anytime soon. They really need to get, the inflation actually might help them a bit, just to kind of get things heated up a little. Like I said last week, I still see this as being in a range, and it's bearish over the 3-month horizon. Let's go take a look at the chart for cable, and we'll see what happened. This is the weekly chart. So last week when we had this webinar, we were right around in here. We're still very much in this range. As much as we stay below this triangle or this down-slipping line here, I would completely expect that line to get tested, maybe touched. And if you look at it, if it comes up and touches here, very likely it's going to come back down and try to touch here or here. If you short it up around this line here and even leave your stop up above here or just behind this line of resistance, you're going to get a very, very tight stop for the kind of reward that you could get on a short trade. It might even be running out of steam already. As you can see, it tried higher, but still closed below kind of this general resistance level here. And it finally did make a decent new high. It's making some higher lows, but these tall wicks here kind of tell us that every time it tries higher, it runs out of steam. Let's go down to the daily chart and take a look. So kind of we came up. We were making a nice little uptrend here, and then we ran out of steam, and now we've come down and we've even broken. Let's draw that line just so we can visualize it better. So we've broken that. Now keep in mind, when we break a trend line, that doesn't mean we're going to just bounce and go in the other direction. I don't believe in V-shaped bounces. So, whenever a trend line like this gets broken, especially this is a relatively short one, I look for consolidation. And consolidation within this range. If it comes up and tries to test this high again, you might want to start thinking about a short. Take a smaller short, give it a tight stop. If it works, there's a lot of downside here. You might even want to, come in real small here, and then add a little bit larger trade above that. Keep your risk managed. Keep in mind that, you might need to let this thing swing into this area a little bit, but you might be able to do an entry, here, an entry here, keeping stops out here. Like I say, keep your risk under management and plan this trade. But if you catch that swing and it comes back down here, that's going to be a nice little trade for you. There's 700, 800 pips to be had there. You might even be able to break it down smaller on an intraday basis and just take 50 to 100 at a time. Something to keep in mind. Most traders that I know, and certainly I traded this way when I first started, they don't look at the weekly or the daily. They don't really have an idea of the bigger picture, and so when you stare at a 30-minute chart or 15 or 5-minute chart, very easy to get vertigo, very easy to get flipped upside down and not know exactly which direction the market's going. I mean, especially when trading cable. I mean, cable can move 100 pips in either direction on any day for virtually no reason. So unless you're taking your intraday trades in the context of a weekly and daily kind of analysis, you're going to find yourself getting caught in the wrong direction and getting literally scared out of trades that'll eventually work. there was a good book, Reminiscences of the Stock Operator, the Jesse Livermore story. And in that, his big thing was he liked to trade in the direction of least resistance, the path of least resistance. And that's really what I'm looking for here. I'm trying to figure out on a longer term basis what the bias is. Where is the more likely direction the chart is going to go? And then I approach my intraday trading on that basis. I trade in that direction. I don't like to trade counter trend anymore. I used to, but I found that sometimes it just took too long for those trades to work, and it was much easier for me to trade in the longer term direction on a sensible, let it come up, try higher, exhaust itself, and then find a good place to get into the short side, because when it falls, it's going to want to fall faster, in this situation, because we have a longer term bearish sentiment. Find that longer term sentiment and trade intraday in that direction, and I think you'll find your results will be much better, and you'll have a much more comfortable feeling about your trades while you're in them. You're going to be less likely to try to punch out of a trade because it's gone against you. All right, so let's take a look at the next.